Hey guys, Stock Saturday, and it's been a bit of a quiet week. I'm up 0.6%, not a huge amount, £2,000. Not put anything in this week. I am sort of buying some bits and pieces, and we'll be looking to add some at some point, but not just yet. Comparing to S&P, it's actually down 0.01%, so really hasn't moved anywhere. But looking at the Nasdaq, the more tech focused is up 1.34%. I believe almost all of this is Nvidia, which had a sort of incredible, shockingly good earnings and sort of beat expectations. So some of the semiconductor stocks have done pretty well off the back of this. TSMC up to 160 now, so I'm 63% green, not including the dividends, so very happy with that. Broadcom sort of getting some love, but not quite so much. Yeah, and not a huge amount else has moved. Process sort of still doing quite well, and the miners sort of hovering around sort of reasonable prices, but the sort of more copper focused miners are doing better. So speaking of Prosus and Tencent, we're off to China for earnings. Not looking too bad. They have been sort of doing a lot of Chinese companies have been doing a lot of buybacks, which I think is sort of raising the overall market in China. But the results as well, sort of underlying results, aren't looking too bad either. That is what you'd want. You don't want sort of stagnating companies and doing well off buybacks, which I would have to sort of cheekily level at Apple, to be honest. But yeah, year on year, total revenue up 6%, quite good for a mature company. Social networks is down slightly, domestic games down slightly, international games up 3%, but it's the online advertising side that is doing pretty well, 26%. Fintech 7%, and then sort of other bets you can't really take a huge notice of. That's up 110%, but it's tiny portion of revenue. So yeah, operating profit up 30%. I can't complain at that. That is sort of a little bit erratic at the moment. Operating margin up 6.8 percentage points, and net profit up 54%. Again, sort of due to write-offs and all sorts of things that have been happening sort of over the last year. Key services, this doesn't really change a huge amount. They sort of say they're number one in pretty much everything. As a percentage of revenue, domestic games up quite a bit. So this isn't 4% growth from previous quarter. It's 4% more of revenue being domestic games. Social networks up slightly. International games down slightly. On the sort of gross profit side, value added services, there's sort of games and social network side 54%. Obviously it doesn't take a huge amount of costs. Their gaming side sort of a little bit up and down with small numbers. Down domestic games down 2%. Honor of Kings and Peacekeeper Elite, they're sort of heavy Chinese games, slightly worse numbers, but yeah, they've got some other games doing reasonably well. Fight of the Golden Spatula. And then international games, Warframe. I always forget they own Warframe. Gross receipts up 70%. But PUBG Mobile is one of their sort of bigger games, and grew by double-digit percentage year on year in Q1. So it's crazy, really. It's quite an old game now. So coming over to their more detailed results rather than the flashy presentation, they give some really important sort of bits and pieces in here. Video accounts, the total user time increased 80% year on year. That's sort of, you could say, more promising than sort of user accounts. The actual user time is sort of more positive. I think partly why YouTube has sort of changed from views being sort of the big factor to watch time being the big factor. Similarly with mini programs, basically their whole sort of WeChat ecosystem, user time spent increased over 20% year on year. So for such a big mature platform, over 20% is very good. Daily activation or daily activations for non-game programs grew double digit, and gross receipt for mini games grew 30% year on year. So very, very strong. And then combined monthly active users of all platforms grew from 1.319 billion to 1.359 billion. So there's always the wonder of how much they're going to branch out outside of China, but at the moment there seems to be still more people in China. Monthly active users of QQ down 7%. That's not ideal. And the balance sheet, they've never been sort of one for hoarding cash, but cash is up slightly. Term deposits up from 185 billion to 241 billion. Cash and cash equivalents is down slightly, but yeah, so maybe they're sort of locking up money for a little bit longer if they can get sort of higher rates. I wonder whether they're investing outside China, because I think China's rates have come down quite a bit, but yeah, whether sort of Tencent are allowed to, don't know. But yeah, I don't really focus on sort of the cash too much from them. It's more sort of other companies like Baidu and Alibaba that are sort of heavier cash. Borrowings sort of down 2 billion, pretty much the same as cash. So as I say, they sort of tend to run a sort of reasonably lean balance sheet. Notes payable down 7 billion, and long-term payables 12 billion, and then sort of current borrowing at 48 billion. So yeah, they are net debt, including, yeah, well, if you take the term deposits as well, I suppose they're about even. So yeah, they do like to sort of buy things rather than hoard the cash, or give dividends, or do a huge amount of buybacks. Yeah, they have noted they're stepping up their buyback plan, on track to repurchase over 100 billion Hong Kong dollars worth of shares in 2024. So that's about 2% through 2.5% of their total shares outstanding. So not a massive buyback plan, but bigger than they've wanted to do before. They sort of had been just buying up sort of anything they could, potentially at inflated prices. But yeah, they see they're going along sort of towing the China line at the moment, doing a lot of buybacks, as well as paying an increased dividend, investing in AI technology, platform enhancements, and high production value content. Obviously, it's a money churning machine, so they have a lot of money to invest. But yeah, 2.5% of shares being bought back can only help. Looking at Baidu, they don't tend to do a sort of super flashy presentation. Much smaller company than Tencent, but total revenue looking okay. 1% up year on year, but 10% down on previous quarter. They are sort of very much more of an other bets company at the moment, so it's whether sort of things can grow in the future. Operating income sort of up 10%, down 2% on last quarter, and net income is down 6% on last year, but up 110% on last quarter. They sort of had some write-offs and sort of one or two issues last quarter, so it is very volatile. But looking at their sort of business highlights, highlighting again, they are all on buybacks at the moment. They've done 229 million since the beginning of Q1. So again, that's about 0.6% of shares outstanding. So on track for sort of 2.5%, similar to Tencent really. Expanding their AI side, which I sort of think is sort of the risk, but I guess they've got to be getting into it. But nobody knows really who's going to win on this side. The intelligent driving, I still think, is one of their sort of big things. People still saying, Tesla are 15 years, 25 years ahead of everyone else. But Baidu provided 820,000 rides autonomous in the first quarter, up 25% year on year. And yeah, so that's 826,000 in a quarter, and they're only at 6 million in total. So it is sort of, growing at a rapid pace. And then their sort of core business, the sort of Google app basically, and related services, monthly active users up 3% year on year to 676 million. Not quite as much as WeChat, obviously, but search engines and things are maybe a little bit more fickle, and people use WeChat, I guess, for some bits and pieces. But yeah, for a much smaller company, I think that's pretty good, having sort of roughly half of China using their system. As I say, their balance sheet compared to Tencent is very, very healthy. You could say sort of a little bit of a waste maybe, but I mean, it's something Google do as well, and lots of other companies just have this sort of war chest that they never seem to spend. But with rates as they are, I guess that's not so bad at the moment. So 20.7 billion in short-term investments in US dollars for sort of a $35 billion company. That is rather enormous. Not a lot of other sort of, 4 billion of cash equivalents. So yeah, 25 billion, that's sort of getting on for 60% of the market cap in cash and cash equivalents, and then sort of long-term investments, long-term deposits, and held to maturity investments, sort of another 12 billion there. And against loans of not very much at all. Convertible senior loans, sort of 395, notes payable, not a huge amount there, and then long-term debt. They do have 5 billion of notes payable and 2 billion of long-term loans. So an enormous net cash position, sort of close to 3/4 of the balance sheet, 3/4 of the market cap. Sorry. So yeah, it does help if the sort of main businesses aren't doing quite so well. They do have sort of gigantic pile of cash, potentially to sort of reinvest, acquire things, but at the moment they don't seem to be willing to use it. So we'll see. It's only a small position for me, but what's something I would consider adding later on, sort of if I diversify out of crypto and the like. So we'll see. Just keeping an eye on some of the commodities as well. Obviously, gold, we've had a fairly big run up since March, sort of $300-400, and then it's had a push for sort of 24.50, rejected right off that. Wasn't happy with that at all, but down to sort of 23.33, which is a great price really for miners. We're going to start seeing sort of Q2. It's in the Q1 results, but that wasn't high prices for all of that. Start seeing if we get much more of Q2 around these prices, I think you'll see an incredibly strong sort of second quarter set of results for the miners. That's where I'm sort of hoping they start to outperform. So I am still buying. But looking at silver as well, starting to sort of have a similar move, much more of a move in May than gold did. It did push for 30 to over $32. Everyone was sort of saying, once we get above 30, or 30 is going to be heavy resistance. It sort of powered through into the high 20s and through 30, sort of seemingly with quite ease, and is sort of resting at around 30. So didn't sort of get this huge rejection off 30 that people were thinking maybe. If it can stick around here and sort of maybe push on with gold pushing on over the next few months, then yeah, should be very nice. A lot of again, a lot of the all-in sustaining cost of miners is sort of between 15 on the very cheap miners, and sort of a lot of them are at 20. Some are at sort of 25. So while we were at sort of lower 25s and 26s, that wasn't really profitable at all, and we're sort of holding them back. But yeah, over 30, especially for the sort of the people who are mining at 20, it's very profitable, and sort of probably as profitable as gold now. So looking good. Copper side, copper has been sort of going bananas. I mean, everything seemed to have gone bananas in the last month. Copper went to sort of $5, intraday like $5.16, and yeah, wasn't very happy around there. So it's come back down to 476 again. Sort of some of the miners that are in, even the higher cost miners are at sort of $3.25, and yeah, the cheaper sort of people like Southern Copper, I think, are at sort of a couple of dollars. So they're very, very happy with 475. I think people sort of get a little bit worked up when it, crashes down, and sort of people think that's it. But yeah, 475, very, very happy. And it doesn't mean, you're going to suddenly get a huge amount of new supply, because, copper mines are taking 15 years to build at the moment, or sort of including getting permitting and everything. So yeah, no huge supply increase on the horizon. And iron ore, one that I sort of do focus on a little bit less. Obviously, I have Rio Tinto and Vale, but yeah, I'm moving sort of more towards copper side and away from iron ore. But seems to have bottomed sort of right on the round numbers. People love the round numbers at $100, and yeah, it's at 117, and it's sort of been there for pretty much all of May. So not looking too bad. Obviously, China are still the big buyer, so is potential issues if they go into sort of a more deeper recession. I think they're sort of already pretty much in recession, but depends if they want to be printing money and getting out of it. Economic news wise, there was a bit. UK inflation numbers came out, and immediately after, pretty much, Rishi Sunak sort of said inflation is over, and declared a general election for about 6 weeks' time. So whether he's trying to capitalise on numbers coming down, and sort of potentially the best time they can get, which isn't exactly a great time. That seems to be it. Headline inflation come from 3.2% to 2.3%. Was expected to be a little lower, but this is largely sort of food and energy base effects coming off. Core was down from 4.2 to 3.9. They were expecting 3.6, so 3.9 is pretty much double the target. And yeah, I don't think you can just mask that with a bit lower sort of food increase. Not as if food is coming down, it's just not going up at the rate it was before. But core are the sort of more sticky things, heavily affected by wages, which are still high. So inflation, not good for us. I think this is maybe indicating that they won't be cutting quite as quickly, but we'll have to see. Some sort of various other numbers, EU PMIs sort of almost as expectations, not a huge amount there. Some of the UK ones as well, sort of bit of a mixed bag. Then Friday you had retail sales and core retail sales all tremendously down from last month, and way, way lower than expectations. And surprisingly, they've blamed this on the weather, which is just silly, because it's not as if last April was amazing weather. I think they just have to have some sort of excuse. And then you had American durable goods much higher than expected. That's just strong US economy. If only we could be the US, even though obviously they have their massive problems of their own. So just looking at the portfolio on the ISA side, CleanSpark sort of been up slightly back. Well, so just looking at the portfolio on the ISA side, the crypto miners have sort of seen a reasonably good week. CleanSpark I think up about 8%, Riot up a little. Still sort of thinking that Riot, even at $10, is a little over my average cost, and it did get to sort of $8 to $9. But yeah, I think even at 10.37, they're not looking too bad. So I've been considering selling off something else, potentially American Tower, and adding to Riot, although it wouldn't be a huge move at the moment. That would only be sort of 10% of my holding. But yeah, I think obviously May and June they're expanding quite a bit and sort of replacing some of the inefficient miners, and you should start to see a fair amount of growth in their Bitcoin produced. So yeah, still think there's potential there. Obviously, CleanSpark looking a little better at the moment because they are mining everything they have. So yeah, gold and silver sort of come down, not as much as I thought they might do with the sort of huge drops in gold. We've had sort of $60, I think, in one day, and sort of a couple of smaller moves, sort of even the days after. Thought they might have a bounce back after, $60 drops, but yeah, the gold and silver miners, I think people are sort of seeing as whether they're seeing the same thing as I do, that even the price it's dropped to is very good for them, and yeah, maybe just seeing it as a sort of slap down that will get reversed and we're going higher. You still have the banks, Citigroup and Goldman Sachs and people like them calling for sort of 2,700. Citigroup I think was saying $3,000 gold in the next 6 to 18 months. It's quite a wide range, but yeah, even if it was 18 months, I think we'd all be tremendously happy with that. And yeah, stocks should do really well. Just looking at the Interactive Brokers side, Pan American Silver sort of still hovering around 21, has been sort of up a bit, down a bit, getting towards my average cost. KGHM, sort of loving the higher copper price and the higher silver price. Yeah, 158. It's been a little higher, but yeah, 35% in the green now. Can't complain. And the option side, say option side, the Chinese tech is sort of not doing anything really. Alibaba doing a little better than Baidu. But yeah, on the option side, I have bought a little more Equinox Gold. As I say, I think they're still not getting the love for their new Equinox mine. I think the Ross Beatty sort of chairman has just noted that I think it was I Am Gold has paid 300 million for a 10% increase in their new mine. So sort of valuing that very, very highly, $3 billion, potentially 345 million I think they were paying, so it'd be $3.45 billion. So yeah, seemed expensive at the time buying the remainder of their greenstone mine, but potentially good gold price going forward, that could look very cheap. And yeah, some of the others have come down slightly. Kerr Mining down a bit, Fortuna up a little bit because they're sort of not really building, they're just mining at a very low price now, so potentially more buybacks and more debt reduction and all sorts. So we'll see. Hymax sort of has come down a little, but not too much. But the only thing I've been buying is Equinox, really, unless sort of something drastically changes. I would consider buying some more Riot, even though sort of potentially not as much growth as the gold miners, because I think people just expect crypto to do well, so they're just priced a little bit more bullishly. But we'll have to see. So leave your thoughts in comments below if you guys are buying anything and what you're looking forward to, and like and subscribe. See you soon.